Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. I'm very happy, to be here again on a new topic. The other day we completed registration of charges, and I was thinking that we will start a new topic today, which would logically be the next logical topic. Okay, before we go in, let's see. 1 second, I'll just minimize that and get this thing behind us. 1 second. Wait. So, Darshan Manakam sir, Sushil Kumar Barik, Ms. Bhumika, Rajini Singh, Roshita, Sudhanshu, and others. As you keep coming in, do record your presence so that Aisha is here. Welcome, madam. Going on. Nice. Today, we are going to continue our discussion on the balance sheet. Friends, did you notice something? Right from, say, share capital and debentures, we have been working on the liability side of the balance sheet. Am I correct? I have been working on the liability side of the balance sheet. In the sense, share capital, equity, reserves, etc., etc., etc. Then we went to debentures, non-current liability. Then we saw registration of charges, which took us slightly on the other side of the balance sheet. We saw the asset part of the balance sheet and linked it to the liability. So whenever an asset is being offered as a, shall we say, security for the repayment of a debt, then a charge is created. The procedure for registration, etc. we saw. Now, we are seeing one more aspect of funding. Share capital, debenture, borrowing, for which we saw charges. See, the minute you say borrowing on this side, on the asset side, what is the asset being charged? So, borrowing means non-current liabilities were seen. Current bank borrowings, OD, OCC, current liabilities other than trade payables, everything was covered. Now we are coming to one more aspect of business finance, which is raising money for short-term working capital requirements through deposits. As you know, companies need funds both for long-term as well as short-term needs. Long-term needs, we can go for term loans, etc., or equity, raise equity or issue debentures, long-term sources. Short-term, the working capital gap. So, the difference between the current assets and current liabilities, which is locked up in the stock and debtors and other, that has to be funded. So, where will I raise money from? So, here is one nice way of raising funds, which is acceptance of deposit by companies. Banks also accept deposits. Finance companies accept deposits. Non-banking finance companies accept deposits. NBFCs, which is governed by the Reserve Bank of India. Please understand. The acceptance of deposits by banks and non-banking finance companies is governed by the, including mutual funds. Sorry, including mutual benefit companies. Benefit, that is the so-called the Nidhi companies. All that is governed by the Reserve Bank of India. Right? Chit funds. All that is governed by the Reserve Bank of India. But when a company which is not engaged in finance business, non-banking, non-finance company, when it wants to accept deposits, it is governed by this chapter. Okay, because if you are a NBFC, you will have elaborate rules which are the Reserve Bank of India guidelines are there. You wouldn't come here. But if you are a manufacturing or trading company and you need funds for requirements, short-term requirements or whatever, less than say 5 years, we'll see that. What is the tenure? Don't be in a hurry. After all, it's my job to teach you. When the time comes, I will teach you. I'll teach you. What is the tenure and all that? We'll see. So, whatever, see, there's a whole lot to be studied on this, including tenure. So, when we come there, we'll talk. If you ask me a question and I answer now, we'll be going out of our topic. So, if after I complete it and you still don't get the answer, I will, at the end of the session, I will answer. So, don't raise questions pulling me from the topic. Don't do that. Allow me to go my flow. If by the end of the session, if you still not, by end of next session, if you still not got tenure, we will talk about it. Okay. Now, I appreciate your enthusiasm and I really enjoy that. But Your enthusiasm should not be such that it will disturb the class. Okay, good. So non-banking finance companies not coming under this. These are non-banking, non-finance companies, meaning companies that are not, main business is not financing of, their main business is something else, manufacturing, trading, rendering of a service, etc. But for the purpose of funding their short-term requirements, that I use the word short-term very, very casually. Don't confuse this with current. The deposits may not be current liability. It could be current liability. It could be non-current liability also. Though that is defined by a different rule, not here. Okay, that is defined by the Schedule 3 format. Schedule 3 format. Don't confuse it here. What you need to understand is, when I need to raise money for working capital needs, etc., I can use deposits, right? So this topic we are going to see under main different heads. The most important part of this topic, is definition of deposit, which is section 2, subsection 31. 2, subsection 31. It's an elaborate definition. In that, see, the definition has to be read along with the rule. Meaning, we will see the definition at the time. I'll tell you. What is important is not the definition, but the negative list. Just like, in GST and ITC, input tax credit, there's a negative list. What you cannot claim ITC. Same way, what is not a deposit, very, very important. You should be thorough with what is not deposit. Okay. Yes, Shivamji, welcome. Then, 73 deals with acceptance of deposits from members. Means any company may accept deposits from its members, which is also governed by these rules. Then acceptance of deposits from public, other than members. That is section 76, but there are many common provisions. I will also be dealing with common provisions at the end, where there are many common provisions. That is, same rule applicable for both deposits from members and deposits from public. So to that extent, 76 have to be read with 73. Provisions of 73 will be applicable to 76 cases also, where you are accepting deposits from public. But for members, they will be slightly different, which is section 73. Public, section 76, read with section 73. Finally, of course, the most important post-acceptance formality. In those days, when I used to teach this topic, especially to company secretaries, I used to divide it into 3 parts, or rather 4 parts. That is, definition of deposits, pre-acceptance formalities, conditions for acceptance, post-acceptance formalities, like that. Definition of deposits, pre-acceptance formalities, before accepting what you have to do. Then conditions for acceptance. To retain the deposit, what you should do. Then post-acceptance formality, what is it you have to do. And then finally, one of the important post-acceptance formality is repayment of deposit. Don't forget to repay the deposit. If you repay, what did the depositor? So here the purpose of these rules and these sections is to protect the depositors who have deposited money with the company. See, the depositor is also a lender. Am I correct? The debenture investor is also a lender. Bank is also a lender. Are they the same? Are they in the same level? Humble submission, no. The bank or the non-banking finance company or the financial institution which is lending money to you is a lender who is well aware. They've got a whole legal department fighting for them, going through the documents, preparing documents, and they make you sign. See, the loan agreement is prepared by the bank and you by their legal department, and you sign it. So the banks are already well protected by their own systems and procedures. So they do not need the government to come and support them. Maybe they need in a different way, which is the insolvency law and things like that. Okay. Debenture holders. Now, these guys are fellows who think they know the market and all that. They are guys who are aware, at least whether they are aware or not, they are presumed to be aware. Whereas the man who deposits the money in a company, who is he? He's an employee of a company, salaried employees, retirees, people who have got their retirement fund, they want to keep it safely. Okay. Aam Aadmi, Man like me, you, my father, your father, my uncle, your uncle. These are the people who are going to put money. So they need protection because 100% they may not be able to understand. See, you are all highly intelligent chartered accountant students. You know so much. I'm an ordinary person. I don't know anything. When I get some information, I don't even know how to read it. I just look at it and it's Greek and Latin to me. Your balance sheet. And that too, with your Indias, you are giving me so many qualifications, so many guidance notes, so many notes and all that. I'm simply deluged with all this information. I'm going mad. But I know one thing. The company's advertisement. I see that. My money is safe. They put an advertisement with easy chair and somebody lying and relaxing and say, give your money to us and forget it. I mean, don't forget it. Give it to us and you can be relaxed like that. So I believe it. And a deposit, which is why there is a statutory advertisement that has to be released. The company cannot simply put this easy chair advertisement and run away. They have to also give statutory information. Whether that is workable or not, at least the information is available, forced. It is compulsory like that. Jewelers taking deposits from public by giving some discount in making charges. That's a very, very complex subject. Friends, jeweler taking deposit from public, if they are see, please, I'll do one thing. Vishwanath Reddy Garu, do one thing. This jeweler example, we will consider it when we come to definition of deposit. Because jewelers generally do not want to even go under NBFC category. They want to be outside of this. So they will try to claim exemption under the definition of deposit itself. But if they want to accept it, then they have to comply with these rules, as you rightly said. If they want to straight away call it a deposit, then it will be. Whereas when they are taking deposits from public by giving discount in making charges, etc., technically they will come under NBFC. You are absolutely correct. You are absolutely correct. They will come under NBFC. But there is one small catch here. I will tell you. In the definition of deposit, when I come there, one of those exempted categories, now I will tell you, that is where the jewelers take refuge. I'll show you at that time. So now we come to the deposit definition of deposit. Okay. According to section 2, subsection 31 of that, the term deposit includes any receipt of money by way of deposit or loan. So if they say any receipt of money, then sales also will be included. So they say any receipt of money by way of deposit or loan or in any other form by a company. If you look at this definition, it's open. Any receipt of money, whenever the company, debentures will be included. A guy joins your company and you take a security deposit from him. That is included. Are you able to understand? So many items are included. But they want to open it because they don't want to take a risk. If you are taking money from the public and it is repayable, if it is by way of a deposit or loan or in any other form, okay, then it is a deposit. But does not include such categories of amount as may be prescribed in consultation with the Reserve Bank of India. See, though this particular rules and provisions are controlled by the Ministry of Corporate Affairs, still money is involved, public money. These two combination. There is a money received from the public and it's a deposit, then money public, then immediately Reserve Bank of India. If you are taking public money and saying, I will give you interest and all, straight away Reserve Bank of India will come. But in this case, since these companies are already under the control of MCA, RBI allows MCA to control it. But these rules will be vetted by RBI and approved by RBI. Okay. So here we go into the definition. So first of all, any receipt of money by way of deposit or loan or in any other form, okay, by a company, but does not include. So what is the important aspect of this definition now? The negative list. Those items which are not deposits. So we are now going to see one by one amounts not considered as deposit. Amounts not some of them are there, all are important, but some are more important than others. See, recently I was in Kodaikanal for a seminar when we were talking about allegory and all that. And one of our seniors, they gave us a book, those of us who won, including me, who won, our presented papers were felt to be of a certain quality. We were declared as sort of winners, and we were given a book as a memento. The book was called Animal Farm. It's a fantastic book by George Orwell. I know CA students who may not even want to know about it, but still, Animal Farm is a fantastic book. A commentary in as early as 1940s about the fate of communism and how it will ultimately collapse. And this George Orwell, he wrote two famous books, Animal Farm and 1984. Okay, Animal Farm is an allegory. And why I'm mentioning Animal Farm, at one stage, the pigs, will take over the farm and they will be running the farm, almost like Stalin was running communist Russia. So the pigs will finally conclude one thing. Initially, they will say all animals are equal. Initially, when they begin the revolution, all animals are equal. Slowly, the pigs will start becoming special category. So finally they will say all animals are equal, but some animals are more equal than others. This is a famous quotation from Animal Farm. All animals are equal, but some animals are more equal than others. Whatever meaning you make out of it is up to you. But in the same way, I am suggesting all these items are important, but some are more important than others. Okay. Those which are more important, I will highlight and say, please remember, right? Good. Anusha seems to have read the book. Excellent. It's a nice book. It's a very small book, hardly 100 pages, but not now. Maybe after you finish your CA, okay, and you become a member of our institute, if you have some spare time, do use it for reading rather than social media, wasting time on Instagram and chat and all that. Try to read some books also. Anyway, so amount received from central government or state government or from any other source whose repayment is guaranteed by the central government or a state government, or any amount received from a local authority or any amount received from a statutory authority considered an act of parliament or a state registry. See, do you notice one common category in this item? Any amount received from government. They have identified specifically from central government, state government. Okay, no problem. Or from any other source whose repayment is guaranteed by the central government or state government. See, for example, IDPA is giving you the money, but guaranteed by Tamil Nadu government. TIDCO is giving money, guaranteed by, IDPA is giving guaranteed by central government. TIDCO, Tamil Nadu Industrial Development Corporation, or MIDCO, Maharashtra Industrial Development Corporation, is giving it, and that is guaranteed by the Maharashtra government. The idea is to promote industry, they will do that. See, when a new entrepreneur, like for example, my Vikram Adekar wants to set up a business, Baba is technocrat. He is not a second generation or third generation rich person. So he has to borrow. Which bank will give him? So the central government may say, technocrats who have studied in IIT, who want to borrow money from the bank should lend. Priority lending. No collateral should be asked initially. In case he does not pay, we will pay. Like that, some guarantee may be given by the central government under a scheme. Whatever it is, when you are receiving money and from central government or any other source, which is guaranteed by CG or SG, or any amount received from a local authority, meaning Corporation of Maharashtra, Municipal Corporation of Brihan Mumbai Municipal Corporation, or whatever it is, you will get your, if you are getting money from them, then, or any amount received from a statutory authority considered an act of parliament, some corporation or something you are getting it. Okay. Then, whatever it is. This is a clear-cut, understandable exemption. Because why should we protect central government here? They are state government. They are already highly protected. They have their own legal advisors and all. From foreign governments, when you are receiving any amount received from foreign government, exempted. Foreign or international bank, exempted. Multilateral financial institutions, exempted. Asian Development Bank, exempted. IMF, exempted. If you're getting it from some foreign sources, no problem. You can take it away. It will not be considered as deposit. Subject to the provisions, but then be careful. The minute you are getting any money, you will have to, the minute you are not getting any money, you are getting any money from a foreigner or a foreign source, or a person resident outside India, then you have to go under the FEMA. FEMA, you have to get approval, or there should be a general approval or whatever it is from a FEMA. For example, you might be getting an ECB, okay, external commercial borrowing. Then there is a separate regulation that you have to comply with under FEMA. Okay. I hope, Sushil Kumar, but it's better now because I wiped the camera. Maybe it's the camera that's the problem. Check it out. I don't know, because it was coming out correctly. Let's check out. I don't know about the image. As loan or facility from any banking company, straight away cleared. So if you take a bank loan, not a deposit, or from State Bank of India, or its subsidiary banks, or from notified banking institution, or from any cooperative bank. So all banks are cleared. So you know what they are doing? They are opening the floodgate. They are opening the tap. They are opening the big area and then slowly closing. So that finally only 4 or 5 holes will emerge. They will be clearly considered as deposit. And you have to comply with the rules. As loan or financial assistance from a public financial institution. Banks are covered. Now PFIs are covered. Today in India, we do not have that many public financial institutions, my dear friends. Earlier financial institutions were seen as something great. So the Reserve Bank of India created IDBI, NABARD, SIDBI, all those fellows. All those fellows, now what they did, see how you do one thing, then you think that is the greatest thing that ever happened in the world. Then you decide to change it, go back to what you were doing. So banks were doing a good job. They could have been encouraged. Instead of having public sector banks, as early as 1960s, if we had had private banks, today India would be way ahead. If only this so-called liberalization had happened 30 years before, we would be better than Singapore, Thailand, Malaysia. We would be beating them hollow. These people have no business to call themselves superior to us. Chota countries they are doing. Why? Because they liberalized fast and they allowed thing. Whereas stupidly we were sitting in socialistic pattern and government-run banks doing nothing, wasting money, all of our money. And then we said these banks are not efficient. Therefore, we will have public financial institutions which will specialized lending institutions, all nonsense. Those institutions became useless. IDBI, IFCI, IC, all of them became banks. Universal. Then suddenly they discovered universal banking. What nonsense. Earlier you had banker. Now why are you going back? So they went back to, and so obviously private sector banks, commercially lending money, who have to reward their shareholders and are accountable to the public, they will perform better than government-run banks. There's no doubt about it. But still, so today not many PFIs are there, like possibly IDBI is there, so IFCA is there, and that too, they are very, very less. Their roles are very, very less. Today banking is done through, financing is done through banks, non-banking finance companies. So this is a long list of amount received against issue of commercial paper or any other instruments issued in accordance with the guidelines or notification issued by the RBI. See, commercial paper is part of the call money or short-term money market, or what we call money market, which is short-term money. Commercial paper. Commercial paper is a kind of bond, but except that the value will be huge. If you want to buy one commercial paper, it will be 50 lakhs, 1 crore like that. One commercial paper value, if you want to buy. So it will be issued at a discount and you will get the commercial paper. Who will buy it? Banks will buy it. Because suppose a bank has a surplus money now, it may want to invest it in CP. Or if it needs money, it will issue CP, commercial paper, whatever. So if a company wants money, they can issue commercial paper. Not all companies. You should have high rating. Not only high rating, your financial should be so high, you should be in the top league of companies. In which case, you can also go for a CP issue. But remember, this is very, very short-term money market. It is not more than 6 months, maximum 90 days. Okay, 180 days is the limit for which you can issue CP, commercial paper. It will be closed in that period. For that, the interest will be calculated. Interest will be very low. But since the repayment is coming fast, for the duration, if you count now, it will be high. You'll be getting a huge amount of interest. Good return you will be getting, but very short term. So when a company is issuing CP, commercial paper, that is not, and money is received against commercial paper, issue of commercial paper, then no, it is not a deposit, provided it is as per the RBI notification. Yeah. Darshan, my age is 57 years old. I was born in 1966. So I know about bank nationalization. Don't worry. Okay, thank you very much. Sometimes I don't know what to take off, sir, Mr. Darshan. I am well aware of bank nationalization, sir. Okay. When it happened, I was very much alive. Okay. 1969, bank nationalization. I was very much alive. Don't worry about that. Okay. For you, it is history. For me, it happened during my life. Okay. And see, imagine, you are only seeing today's liberalized banking system, Mr. Darshan. I have seen bank nationalization. I have audited nationalized banking system, then now privatized banking system. I've seen everything. That is why I'm telling with authority, public sector banks are useless. They are not useless. They are useless. Okay. Because Swami Chinmayananda used to say, youth are not useless, they are useless. Swami Chinmayananda used to say, youngsters are not useless, they are used less. So that's what he used to say. But public sector banks are not useless, they are useless. Nobody will go there. No services, they don't have any, customer orientation, etc. Anyway, they'll have their own natural death in another 5 years, maximum another 3 years, 4 years. Everybody will go, either be acquired by somebody or merged. Finally, only one monolith will be there. That is this man, State Bank of India. Subsidiaries of State Bank of India have already been merged into State Bank of India. Today, there are no subsidiary banks. State Bank of India may have some subsidiaries, but those main 5 subsidiaries are gone in. State Bank of Patiala, State Bank of Bikaner and Jaipur, State Bank of Travancore, State Bank of Hyderabad, State Bank of Mysore. All those fellows have gone into State Bank. Today, there is no subsidiary, only State Bank. Okay. So only that State Bank will be, only the State Bank of India will be standing monolithic. And they may also be sold totally to a public, through public issue, a further offering, and government stake will be totally diluted. It will become a normal private sector bank. Okay. It will become a normal private sector bank, like any other bank, like ICICI Bank. It will go on with its life. Now, by company from any other company. So intercorporate deposits are not covered under definition of deposit. Intercorporate deposits are not covered under definition of deposits. Okay. Now, any amount received, again and again connect this and read. Amount received pursuant to an offer made in accordance with the provisions of the Act towards subscription to any securities. So whenever the company issues a prospectus or offer for sale or letter, offer for sale anyway won't come in this category, issues a prospectus or a private placement letter, whatever they are doing, and they are raising equity, okay, where money is received pursuant to offer made in accordance for subscription to any security, so long as such amount is appropriated only against the amount due on allotment of the securities applied for. So if you are raising funds through public issue, that amount will not be considered as deposit, including share application money or advance towards allotment, whatever you call it, that money will be not considered as deposit, provided the allotment of the securities is made. If you are not using that money, as so long as such amount is appropriated, means used. Appropriated is a very big word for simple word called used. Just substitute used there, you are okay. So long as such amount is used only against the amount due on allotment. Or if you want, you can say appropriated, you can say adjusted. Amount is adjusted only against the amount due on allotment of securities applied for. So how much, in case you are keeping any money which is not, you are taken money from the public, excess subscription, you can't keep it. Do you remember what we studied in share capital and debentures? How long can you keep that money? After that, what you should do? if you have received money, if you are not making allotment, how long you can keep it? 15 days you can keep it. After 15 days from the close of the issue, if you keep it, with interest you have to repay to that day. And penalty is also there. Okay. So though it's not a deposit, be careful. There's other provisions controlling it. From a person, very, very important. You notice something? Some of these are in white background, whereas some are in blue background. Am I correct? Blue background. Blue background are more important. Blue background are more important. So next blue background. From a person who at the time of receipt of the amount was a director of the company or a relative of the director of the private company. So director of a public company or director or relative of director of a private company. Private company only you can have relatives also giving. Public company only director. See, this is a very important loophole in the law. Many companies, when they want to, take money from somebody, it's as an unsecured loan, they'll come to me and say, Srikanji, this is how it is. I want to take money from so and so. He's got some money and I need money for my business. Can I take it? How are you going to take it? Unsecured loan, sir. I'll take it as an unsecured. Then I tell him, sir, straight away it will become deposit. Because you will see the entire list of negative list that this category will never be exempted. It will come under the category of original definition, which is any amount received by way of loan or deposit. Okay. So that this will not come. So I say it will become so immediately they'll say, I need that money very urgently, Srikanth, 13 crore, I need it. What to do? Then I'll tell them, please note, if at the time of giving of this 13 crore, this gentleman is a director, then no deposit. How to make this man a director, Baba? Like that they will ask. No, okay, don't make him an executive director. Make him a non-executive director. Okay, clearly non-executive. He will not have any power on day-to-day matters. Nothing. Only come for the board meeting. Simply naam ke vaste, we will keep him. But if at all he gives like that, no deposit. Sometimes they do that. They take people as, see, you got a guy coming in with a lot of money. He wants to lend it to you. But if you take it from him, you are a company. If you take it from him, it will amount to deposit. Therefore, to bring it under this exemption, we will bring him in as a non-executive director. There's a slight loophole in the law. Little bit of breathing space for the businessman to run his business. Okay. Now, very, very important. The director of the company or relative of the director of the private company, as the case may be, from whom money is received. Please note, director of the company applies to both public and private company. Only relative will be only for private company. Okay. As the case may be, from whom money is received, furnishes to the company at the time of giving the money a declaration in writing to the effect that the amount is not being given out of funds acquired by him by borrowing or accepting loans or deposits from others. See, the idea is you should not have some agents. Make these agents your directors. And then the agent will go and accept loans or deposits from the public by giving false information. Then he will come and give it to you as a loan and claim exemption because it is a director. No, it should be his own money. The funds given to the company should have been out of funds acquired by him. It should not have been acquired by him by borrowing or accepting loans or deposits. It should be his own money, right? Of course, this is one thing that is always violated. They'll come to us and he'll say, sir, we are borrowing money and giving. Mainly what will happen is the directors themselves will borrow money and give. Sometimes. What to do? Because you have to run the company. Simply, I'll tell them, boss, what you're doing is your exemption is gone. But give a declaration. I'll tell the company secretary or the MD, sir, whoever is giving this money, please take a declaration from them saying, I am not giving it out of funds acquired by me by borrowing or accepting loans or deposits from others. Later on, if they are found, it's a lie given by them. That's their problem. We are safe. At least we took a declaration before we accepted. Okay. Now, we here spoke about share application money received. So when you are receiving share application money, it will not be treated as deposit, provided the shares that money is appropriated or adjusted or used only against allotment of securities applied for. Now, question, how long can I keep that money? Any money, can I call it as share application money, keeping it pending? No. So this share application money pending allotment is another nonsense. Share application money pending allotment. In which case they say, where you are saying that you have received money for against share application, then the securities for which application money or advance for such security was received shall be allotted within 60 days from the date of receipt of the application money or advance for such securities. Please note, this is in addition to excess subscription in prospectus, which has to be refunded within 15 days. If such allotment is not done, such application money or advance shall be refunded to the subscribers within 15 days. If such refund is not made, such amount shall be treated as a deposit under these rules. Are you able to understand? Any adjustment of the amount for any other purpose shall not be treated as refund. You can't simply say, I'll adjust it against. No, you have to give the money back to him. You took money, you give back. Okay, you can't adjust it also. No. Got it? So this is a very important point that you might want to remember. If you are finding share application money pending allotment, please, if you are auditing or during your auditing, you find share application money pending allotment, kindly find out when the money was received, because the allotment should be made within 60 days. If not done, the amount should be refunded within 15 days. Otherwise, it will be treated as a deposit. So this is something that you might want to be alert about when you are conducting a company audit. One more thing, most of the topics we studied now, share capital and debentures, charges, deposits, these are all topics which will be very useful to you in company audit. When you are studying auditing, there's another topic called auditing. I'm sure there's a topic. In that topic, this will come again. There's an overlap of these two topics. So don't do double study. Whatever you studied here, go there and check. Whatever is common between these two subjects, ignore it one subject. Don't waste your time. Only the new things you have to read there. That's all. Like that, you can reduce your content. There will be many, many topics that overlap each other. So if you study in one place, it's enough. Don't have to study again. There you can build on the foundation that you got here. There you can go into the next level. There they will be giving you a checklist and all that you can go. But the basic provisions, if you are finding it there, don't waste your time. Again, reading it. We continue with our definition of deposits, amounts which are not to be considered as deposit. Amount received by the issue of bonds or debentures secured by a first charge or a charge ranking. Now, see, now that you have studied charges, this is not confusing for you. That is why the order in which this topic should be taught is this. Registration of charges, then deposits. By the issue of bonds or debentures secured by a first charge. In my charges class, I clearly explained to you what is first charge. Also, pari passu charge. Okay. First charge means when the asset is sold by the creditor, security, whatever is realized, the first charge holder will get the entire amount. Then only second and subsequent charge holders. Whereas if it is pari passu, whatever is sold, all of the secured creditors who have the security as asset as security will get proportionately in pro rata, pari passu. Okay, got it? So where you are issuing bonds or debentures, see in India we call them debentures, but basically they are bonds. Okay, and these bonds or debentures are secured. They are secured. They are not naked debentures. They are secured by a first charge or charge, pari passu charge, with the first charge on any assets referred to in Schedule 3 of the Act, excluding intangible assets of the company, or bonds or debentures compulsorily convertible into shares of the company within 10 years. So when you are issuing bonds or debentures which are secured, so straight away, secured debentures are not deposits. Secured debentures are not deposits. No problem, because they are already governed in section 71. Now you already studied it now. They are already covered there. Deposits and debentures are covered. Repayment, etc., is covered. So here they exempted. But remember, this is applicable only to secured debentures, which are first charge or pari passu charge. Unless there is an asset offered as security, the debenture cannot be exempted. This applies to all companies. Okay. Clear? Secured debentures are exempted. Now, whether secured or unsecured, if you are issuing non-convertible debentures, not constituting a charge on the assets of the company. So these are unsecured, naked debentures, but non-convertible. That is, clearly on a due date, they have to be paid and listed on a recognized stock exchange. Listed debentures, as per applicable regulations, exempted. So, normally, only secured debentures can be considered. Charge where there's a first charge on any assets under Schedule 3. Okay. But the asset should not be intangible asset. It should be a tangible asset. Okay. Also, bonds are debentures which are compulsorily convertible into shares. Compulsorily convertible. The compulsorily is different from convertible. If you say convertible, it is always an option. After the due date for conversion has happened, the company will send a option letter to you. You have to choose. You want to convert, in which case we'll allot shares. If you don't want to convert, here is the money, take it and run. They'll give back the money. So they will give clear instructions. If you tick this box, then you give the DPID. Shares will be credited to your account. If you don't want it, then tick this box, give the bank details or whatever is the bank available in your DPID, straight away it will be credited. Money will be credited in the account. Means it will be redeemed. So, but if it's compulsorily convertible, then no question of redemption, only shares. It will be converted into shares and shares will be credited into your account. Okay. So if it is compulsorily convertible debentures, convertible within 10 years, then not a deposit. Okay. Good. By issue of non-convertible debentures, we saw that. From an employee of the company not exceeding his annual salary under a contract of employment with the company in the nature of non-interest bearing security deposit. See, in many cases, companies accept security deposit. Companies accept security deposit from the employees. Because he is taking on a responsible position. Maybe I'm making him my cashier, in which case he is going to control on a daily basis crores of cash and money. So in case he commits a fraud, something I need some control over him. So I will say, sir, you want this job? Then you have to give me a security deposit. Again, the value of the deposit should not exceed So employees who are giving security deposit up to 1 year's salary are exempted. That is exempted. See how they are opened up the definition. Now they are narrowing. So many items are being taken. As non-interest bearing amount and held in trust. See, it is not my money at all. I have received it. And I am keeping it for somebody else, not my money. Okay. This is possible in some cases where wrongfully some money has been transferred to you by the bank. I'll give a very simple example. Suddenly in your bank account, you find 5 crore has come. It is there for 6 months and then again the bank reverses the entry and takes it back. Now, where did this money come from? It is not yours. You have no entitlement to it. So you're holding it in trust. Then in those cases, when the bank is again claiming it, you'll give it back. So the bank cannot actually take it from your account. They'll come and beg you. In fact, many cases, what the banks will do, like fools, they will credit your account, whereas some other account should have been credited. So it is not one problem, it is 2 problems. Because I have got 50, in fact, it happened to me once. I had 5 lakhs, they gave me 5 lakhs. Suddenly 5 lakhs is sitting in my account from the bank, Canara Bank. Then I go there, they are not able to understand. Then they say, you please check your accounts. I was waiting. Who is giving me 5 lakhs? Then I checked my personal account, why is it hitting? If at all client is giving me fees with GST, he has to pay. That too, it goes to the firm account. I don't have any control over it. Whatever little bit I need for my food and clothing, I take it from my firm as a salary. How can I take? What is this 5 lakhs? So what happened is I put it in my housing loan account so that if I put any credit in my housing loan account, there will be no interest. The bank will not. See, I have an arrangement with my banker by which whatever they give me a SB account, whatever money I keep in the SB account, to that extent, my housing loan will be reduced. Only on the difference I will pay interest. So I took this 5 lakhs and put it in that account. But I am not owner of that money. I am only holding it in trust. In the same way, if the company has received any such money which is held in trust, not a deposit. Now I will come to Mr. Vishwanath Reddy's points. Let us see. Amount received for the purposes of the business of the company as an advance for the supply of goods or provision of services. This is where your jewelry people kept. If you are asking me about jewelers, this is where they come. They come under this, say, when you open a chit with a jeweler, he is not taking any deposit from you. He is taking advance for supply of gold or the diamond or silver or whatever you want. He will give clear terms. If you see the chit fund book, now you will really clearly understand. He will say, this is received as advance for purchase of future purchase of gold. 11 months you pay. 11th month you come, you take the gold and go. No money, no repayment of money. That is how the jewelers come, and they will not give any interest. Instead, what they do, since he is keeping your money and rotating it, he will, as you rightly say, give you concession in making charges. They take atrocious amounts as making charges, 16%, 24%, and then wastage, all that. So you will say no wastage. Chit fund, if you are going through this monthly saving scheme, no making charge, no wastage. On making charges, we'll give you a discount up to 18%, 16%, like that. Are you able to understand? Actually, very beneficial. But it is not to be considered as deposit. One more method is there. That is, when you deposit 10,000 rupees, straight away, they will not treat it as a deposit. They will treat it as a purchase of gold. But they'll keep the gold with them. In other words, on that day, whatever is the gold rate, they will treat it that they have bought the gold, and that gold, you are lending it to them. So you are a lender of gold. You are like it is like a metal loan you are given. So he'll keep that gold. Obviously, that gold collected from all the chits now will be lying in the shop in the form of jewelry. It will be funding him now. So technically, it's funding him, but it is not a deposit. So later on, when you want to convert it into jewelry, he will call you. Another advantage he will give. He will give average rate advantage when the market is somewhat going up. But when the market is going up like what's happening now, heavy loss for the jewelers. So they will stop. Now they have stopped that metal scheme. Now they are saying, you pay chit, we will credit in your account as advance for the supply of goods or provision of services. So Mr. Vishwanath Reddy, have you understood how jewelers come in this category? So they will not come as deposits. It will come out of the definition of deposit. It is not a deposit. Which is why whenever I am designing these schemes for my clients, for jewelry clients, I ensure that the wordings are very, very clear. Nowhere you should say it will be refunded or that interest will be paid. No. Some foolish people are doing it. They will be caught. What they are doing is violation of these rules. Okay. Many times some people consult me also. They ask me, tell them, please don't do it, sir. It is a violation. No, sir. So-and-so company is doing so-and-so company. All of you together will get in trouble. That's all. Okay. So one boy did a wrong thing. Then seeing him, you do. Then when finally headmaster catches you, all of you will get punishment, 100%. It's not that because he's doing it, you are escape. He will escape. You will also get cut. You will also get cut. Okay. So don't violate the law. An advance in connection with consideration for an immovable property. See, you have identified an immovable property. You want to buy it. The owner is a company. You give him an advance for the purchase of immovable property. In his hands, it will not be a deposit. Are you able to understand? Similarly, a security deposit for the performance of the contract. Means this is not employee. This is contractor. You are hiring a contractor. You are a company. You are going to construct a new boiler plant. You are hiring a contractor for constructing the boiler, maybe Thermax. So at the time of contract itself, you will tell them very clearly, whatever is the contract value, 25% has to be kept as security deposit. Later on, once you complete it totally, we will settle you in full. This 25% will refund at that time. Till such time, it will be kept with us as security deposit. That is not coming under the category of advance. Okay. Bhumika has a question. Sir, borrowing from jeweler is category as pledge. Madam, see, the word pledge has nothing to do specifically with jewelry. Jewelry is one item that is regularly pledged because of its value. Basically, what is a pledge? Later on, you will study it in special contracts and contract act. So, when movable goods are bailed or when the possession of movable goods is transferred as security for a loan, it is called pledge. When possession of movable goods is transferred as security for a loan, it is called pledge. See, that day I gave you the example of watch, right? When I said I want to borrow 2,000 issued debentures, what was the security offered? I offered the security of my watch, which is a movable goods. When movable goods are, how can I transfer ownership in this watch? By mere transfer of possession, mobile property now. So when I deposit this mobile property with somebody and say, kindly give me 2,000, once I repay, you give the watch back. This is called pledge. Not necessarily jewelry, any mobile property. My watch, anything, okay, can be kept as a pledge and you can take the money. In fact, in Tamil Nadu, there is a famous story of a singer, like in Hindustani music, you have rags, you have malhar, you have like that rags. In Tamil Nadu, in Andhra, Tamil Nadu, we have a raga called Todi. So there was a moneylender in that town, and this singer, who was an expert in singing Todi, the Todi rag, used to be the expert. Nobody in that country could sing better than him. That gentleman needed money. So he goes to the moneylender. He says, give me money. He says, what security you can give? He says, I have nothing. Then he says, give me your ragam as a security. He says, Todi becomes security. How? Till you repay the loan, you should not sing it anywhere. This man accepts. He says, I need money very urgently. I'm a poor man. I will not sing Todi. Okay. This is a story told in, see how, this is not an example of pledge. Okay. But in a way, this is an example of, shall we say, a conditional contract, where there's a condition that if you don't, till such time you repay the loan, you cannot sing that raga like that. See, the moneylender was so jealous of the singer, possibly, that he said, cannot sing it. Then, of course, the story goes that some of his very rich, patrons, they heard about this and they went and repaid and released Todi. And he was then invited and asked to sing that raga again. See, well, since you asked me about pledge, I'm saying, okay, good. By now, you might have noticed one thing, no topic, you can approach it casually. Everything needs to be understood from depth, especially by a chartered accountant student, because you are an expert. So casually, you cannot learn things. When you learn something, learn it fully with a lot of understanding of the core principles involved. Without understanding that, if you read some 4 or 5 lines from WhatsApp or ChatGPT and you think you know the knowledge, no. You have to have depth. And then you have to keep increasing also. Suddenly you find you are an expert in the field. Okay. You can answer any question with authority. So later on you will come. When you are taught Contract Act, they will teach special contracts, indemnity, guarantee, bailment, pledge. So there you will learn it. An advance received under long-term projects for supply of capital goods, except as consideration for an immovable property. Okay, because that is already covered in the B. So any other advance under long-term projects for supply of capital goods. See, the reverse side is also possible. Now you go to Thermax. You are a private sector company. You tell Thermax, we need a boiler. Okay, we will give you. Before we give, the minute we start, at the time of signing the contract, you have to give us 25% advance. Okay, for supplying the boiler. Finally, when the boiler is fully supplied, you adjust. In the meantime, this advance will be with us. Such advances against the supply of capital goods or not. But only for capital goods like machinery, building and all. For capital goods like machinery. For building, land, etc. No. That will come under B. Okay. As an advance towards consideration providing future services in the form of a warranty or maintenance contract. So, for example, when you buy a car, they might say, we are giving you 3 years warranty. Beyond that, 2 more years we'll give you, provided you pay us 40,000 extra, you pay. That's a advance towards consideration for providing future services. This has an accounting implication also, but then it should not be taken to the P&L account. It has to be kept only in the balance sheet as an advance, but it is not a deposit. As an advance received and as allowed by any sectoral regulator, okay, means telecom regulatory authority, if they are allowing you to collect advance, you can. For example, you want to have a new mobile connection, you go to the mobile telecommunication company, immediately they'll say 200 rupees security fees, advance, give it to us. Then start paying every month, prepaid or whatever. That is permitted by TRAI, the Telecom Regulatory Authority of India. So, no problem. Believe me, if you total up all these amounts received by Airtel across the customer base, it will be huge amount. Huge money they will be getting like this. You and I don't bother. No, 500 rupees, 200 rupees, just throw it at his face. Give me my SIM, go, run. I need to call my girlfriend. So you are in a hurry. But all those 200 rupees, 300 rupees accumulating, straight jolly income for them, but it is an advance. So slowly they will recognize it as income over a period of time. As an advance received and as allowed by sectoral regulator. As an advance for subscriptions towards publication, meaning if you want an advertisement to be published in the newspaper, you have to pay in advance. So the newspaper company which receives such amount, it is not a deposit. Now, again, point to be noted. If the amounts received under item A, B, and D above becomes irrefundable, what is A? Supply of goods or services. B, consideration for immovable property. D, long-term project. Idea is you should not repay. I told you now, money should not be paid. It should only be adjusted against supply of goods or immovable property or long-term capital goods. Otherwise, if it becomes refundable with or without interest, due to the reasons that the company accepting the money does not have necessary permission or approval, wherever required to deal in the goods or properties or services for which the money is taken, then the amount received shall be deemed to be a deposit under these rules. If you do not adjust it against goods or properties or services, then you have to straight away treat it as deposit. And above amount shall be deemed to be deposits on the expiry of 15 days from the date they become due. So you are given 15 grace days to repay the amount. If you do not do it, then you have to comply with all the requirements of deposit. Amounts received from promoters of company subject to the fulfillment of the following conditions. See, earlier we saw amount received from directors. When again, do you notice one thing? I want to again stress here. Any amount received from a person who at the time of receipt of the amount was a director. Many times what will happen? They will borrow money from somebody. Okay, they'll borrow money and then they'll come to me and say, sir, now I will make him director. I'll say, sorry, sir. Before you took the money, that fellow should have become a director. So that when the money is given, at the time of receipt of the amount, he should be a director of your company. Please note this very, very important point. Similarly, now we are talking about amount received from promoters. Promoters means those who are interested in promoting the company, etc. So they have got. Now, they have borrowed money from the lending institutions. They have started. But suddenly there is a cost to overrun in the project. There is a cost to overrun. My original project budget was 200 crore, for which I said, I asked the bank to borrow, to lend me money. They gave me 150 crore. I bought in my money, public issue, another 50 crore came. So 200 crore project. 6 months down the line, 9 months down the line, I find I need more money. There is a cost overrun. Now I go back to the institution and tell them, boss, I need another 50 crores, 250 crores. Means I need to. They will immediately say, look here, we will lend, but not 50 crore. We will give you 35 crore. You bring 15 crore, 15 crores of your own money. Show me, at least bring 10 crores of your own money. So when the loan is brought in, because of the stipulation imposed by the lending institutions on the promoters to contribute such finance, where, see, you are not bringing it out of contractual, that is, company is not asking, they are not giving. The institution is saying, if you want to borrow further amount from me, the promoters, that is those people who are running this company or promoting, they should bring in money as a loan. Promoter here does not mean only directors. It could be non-directors also. It could be, for example, the Tata Group, Tata Motors may be the promoter. This could be another company formed by Tata Motors, in which case other shareholders are there. Now Tata Motors is a promoter company. They will bring in money. Right? Of course, Tata Motors is a company. This is a company straight away exempted under thing. Suppose the individuals are also there. Together, the Tata Motors and other Tata family members, they all bring in money. Okay. Then their money is coming. It is coming because of the stipulation imposed by the lending institution. The loan is provided by the promoters themselves or by their relatives or by both. Such exemption shall be available only till the loans of financial institutions or bank are repaid and not thereafter. This being a special case, they are creating or carving out an exception. Amount received by a Nidhi company in accordance with the rules made under section 406 of this act. So Nidhi company is governed by section 406. So Nidhi company will accept deposit, no condition. This rule does not apply. But be careful. Nidhi company is not exempted totally. It is exempted from this rule. Nidhi company is not covered by Companies Act rule sections, but it is coming under the control of the Reserve Bank of India. Do not forget that. Okay. Here we are letting him go because anyway he is coming under the control of RBI. Right? By way of subscription in respect of CHIT under the Chit Fund Act. Again, CHIT also comes under the RBI straight away. So if you are a chit fund company, go. But one more thing, if you are a chit fund company, believe me, you are already NBFC. You are straight away covered under the RBI. So they are exempting. By the company under any collective investment scheme. So this could be an asset management company or a mutual fund, which is running a collective investment scheme where they collect money from a lot of people and they invest it in the stock market and give them return, provided it is in compliance with the regulations framed by SEBI. See, so technically speaking, they are not borrowing from you. What they are doing is they are putting up a collective investment scheme. Okay, for example, one of my broker has got a scheme like that where they'll collect 10 lakhs, 10 lakh, minimum one shot I have to give 10 lakhs, 20 lakhs of any multiples of 10 lakhs. They'll take the money from me and then they will invest it in a selected list of companies which I am already aware of. They will put bulk amount and see the idea is they have better control. So they will. Of course, those 10 companies I have also arrived at it and I have also invested. But I found there, hey, it's nice. Let me give the money to him because same companies only he is also investing. Whatever growth I'm predicting, 100% it will happen there also. So I've given. So that is called collective investment scheme. That is not treated as deposit. Then we come to startup company. Amount received of 25 lakh rupees or more by a startup company by way of a convertible note repayable within a period not exceeding 10 years in a single tranche from a person. See, some investors may not want to straight away invest in shares of a startup company because startup company is definitely a dangerous company because the promoters are not sometimes very serious. They will be talking all nonsense. They will say, I got idea. For idea, they can't give money enough. So 2 years down the lane, they will be useless. They will be seen as useless fellows. So we don't want to invest in, better we go through a debt route. So we will tell them very clearly, Baba, I will give you a convertible note. I will give you a convertible note. Note means, it's like a debenture. It's like a promissory note. So I will give you money. You give me a promissory note type of a document which says that you owe me money. It's a debt. Okay. Repayable within period of not exceeding 10 years. Then, to that, so long as this note is issued by a startup company, 25 lakh rupees or more, then it will not be treated as deposit, because ultimately it's a convertible note. So at any time, the lender can convert it into an equity. That is why, see this convertible note has the benefit of both the worlds. On the one hand, it is a debt, and I have control over you as a debt. I can take interest also, and I can ask for repayment. But in case you are doing well and I'm seeing a good scope, then immediately I'll convert the note into shares. So in those type of instruments are not covered by deposit. By a company from funds registered with the SEBI in accordance with regulations made by it. So where there is a mutual fund, that mutual fund may be sometimes, debt funds are there. What they will do, they will take money and give it to a company as a loan. And that interest they will return, and that will be shared by the unit holders. So in those cases also not a deposit. So we have seen so many items which are not deposits, right? The blue items. When you get the notes, please concentrate on the blue items. We move on to startup company. Some definitions are given. Startup company means a private company incorporated under the Companies Act and recognized as such. Many times, many entrepreneurs come to me and say, Mr. Srikanth, I'm running a startup company. I ask him, what do you mean by startup company? No, sir, I'm a startup. What do you mean by that? They don't know. Then I'll tell them, my dear friends, first you go and get yourself recognized by the Department for Promotion of Industry and Internal Trade. First step, go and get yourself registered. That is when you will be called a startup. That itself is very difficult. Simply, you can't take some nonsense company and say, I'm a startup company. They will want to know what are you doing. That is one level. Next level, they have to get exemption. For that, they have to go through under the Income Tax Act. They have to go through a different committee. Who will literally take them apart. Finally, you might get your exemption as a startup company. In which case, you are exempted under the Income Tax Act. Your profits are exempted and many benefits are there. So if you want all those benefits, the first thing is you should be recognized as such by the Department for Promotion of Industry and Internal Trade. You should have that certificate first. Then only can proceed next. Convertible note means an instrument evidencing receipt of money initially as debt, which is repayable at the option of the holder. Please note, it is startup company, nothing. When I want money, give it back. If I want share, give me share. Or which is convertible into number of equity shares of the startup company on occurrence of specified events. So you can say, once you start commercial production or once you start commercial billing, I will convert. So at that time, you will convert. Okay. As per other terms and conditions, including price, I might say, whatever may be your valuation on that day, I will convert at this price. Like that. Obviously, see, startup fellows are begging. Beggars can't be choosers. Let them obey what we say. I mean, they may be great, brilliant. Every one of these startup fellows are not Steve Jobs, I say, or Elon Musk. They are just the engineers who think they can get out of company and do some nonsense and become billionaires. It's not going to happen. Not everybody can do that. Questions? Just to see whether you are there or not. Because maybe the lecture is so boring that some of you went to sleep. I'm so sorry. So here is the question to wake you up. Hi. Comment whether because I don't get any comment for the long time after Bhumika. I'm getting doubt whether anybody is even listening to me. Hi, out there. How are you? Like that. I have to tell. Okay. Yeah, read the question and comment whether the following are deposits. A. Rupees 5 lakh raised by Rishi Limited through issue of non-convertible debentures, not constituting a charge on the assets of the company and listed on a recognized stock exchange as per SEBI guidelines. Is it a deposit? I'll wait for your answers to see whether you have understood. Under which exemption will that A come? Let me see. B is rupees 2 lakh received from Mr. Tejas, an employee of the company who is drawing annual salary of 150 under a contract entered with the company in the nature of non-interest bearing security deposit. So, A, Darshan, A not a deposit. B, it is a deposit as it is in excess of the annual salary. Beautifully said. Correct answer. Correct answer. Rajni says A is not a deposit. Correct. A is not a deposit because it's coming under this category. Issue of non-convertible debenture, not constituting a charge. Employee security deposit should be up to, should not be exceeding its, see they say an employee of the company not exceeding his annual salary under a contract of employment of the company. So here it is exceeding his annual salary. Ms. Arya, you are saying it is a deposit. Which is the deposit, A or B? Because there are two here. Bhumika is coming correctly. Not a deposit, deposit. Amount of 3 lakhs received by a private company from a relative of director, declared by the depositor as out of gift received from his mother. Mr. R gives an unsecured loan of 5 lakhs to the company on 19/6/2020. On 3/7/2020, he is appointed as director of the company. Okay, Arya says it was for B. Correct. B is the deposit. Now let's do C and D. C, not a deposit. D, deposit. Rajini, super. Correct. C is not a deposit because, see, the only saying when the person is a director, the money should be given, should not be out of funds acquired by him by borrowing or accepting loans or deposits. Whereas gift from mother is not a problem. Valid. And it can be given as a deposit. It will not be a deposit. So C is not a deposit. D is deposit because on the day when the amount was given, he was not a director. See, your answer is correct, Kavita ji. It is not a deposit. No, C is not a deposit. C. But yeah, relative is an exception, but yeah. Amount received from a relative of a director by a private company is an exemption. Okay. So the exemption is not for relative. Exemption is amount received from a relative of director by a private company and should not be out of loan or acceptance of deposit. C not deposit, D deposit. Correct. Beautiful. Okay. As per Rule 2(1)(d), the term depositor means any member of a company who has made a deposit with the company in accordance with Section 73, or any person who has made a deposit with the public company in accordance with the provisions of Section 76. Okay. So, any person who has made a deposit with a public company under 76. Any member who has made a deposit with the company in accordance with provisions of Section 73. Okay. Companies, no, we move on. I have finished definition of deposit. In case you have any doubts, yes. So we have answers from Vaishali Bindal also, almost on the same line as Bhumika. Great. Now we have finished definition of deposit. Before I go forward, any doubt on this? Any doubts? I presume that you have no doubts. There is a doubt. Shnath Reddy. What if NCD is secured with charge on assets raised? Let's go there and see what your doubt is. NCD not constituting a charge. So NCD secured with charge on assets. Yeah. See, if you're raising NCDs secured with charge on assets, no problem. That will come under the issue of bonds. See, NCD is also debenture. Where it is secured, it will come under the earlier exemption. Where it is a secured debenture, charge on assets, then it will come under the earlier exemption. So here you need not bother. It is not. It is unlisted. No problem. If an unlisted company is issuing NCD, which is secured on asset, no problem. It will come under the exception. Okay. Got it, Mr. Vishwanath Reddy? Now we move on to the rules relating to acceptance of deposit. Now we saw what is a deposit. Now once you say you are accepting deposit, what are the compliances? You have to apply accept deposits only in accordance with Chapter 5 and the rules. All companies may accept deposit from members. All companies may accept deposits from members, but only eligible public companies can accept deposits from both members and public. See, which is why they say depositor means member of a company who has made a deposit. So member, both private and public companies can take from members. Only eligible public company can take from public. Only eligible public companies can accept deposits from both members and public. Private company can accept only from members. Public company, eligible public company can accept from both members and public. Ineligible public companies can also take deposits from members, but only eligible public companies can accept deposits from both members and public. What is an eligible company? 76(1) read with Rule 2(1)(e). It should be a public company. So private companies cannot accept deposits from public. They can only accept from members. If a public company is not having a net worth not less than 100 crores or turnover not less than 500 crores, then it is ineligible. It can accept deposits from members, but not from public. The idea is simple. If you're going to go to the public and take money, you should have some credibility now. You're saying, I am so-and-so Mannar and Company Limited, you should be some worth should be there. Yeah. Adekar Industries Limited. Minimum net worth not less than 100 crores. Or at least turnover. See, okay, maybe your net worth is not 100 crore. Turnover should not be less than 500 crores. For example, we got a corporate client whose net worth is not very high, whose net worth is about 20 to 30 crores, but turnover is 800 crores. So they become eligible, right? If so, then an eligible company should be a public company, net worth not less than 100 crores, or so any one condition is enough, or turnover not less than 500 crores. In case the amount is within 181C limit, that is paid up capital plus free reserves, that is the amount, please note, 181C is not in your syllabus. We already saw its ugly face earlier. Debentures mein. Same here. You remember in debentures also we saw its ugly face. Special resolution, ordinary resolution, all that nonsense. Okay. Now, if you want to accept deposits from public, then if those deposits to be raised together with all the other borrowings, please note, you should take the complete borrowings cumulatively, add this to that. If that amount will exceed the paid up capital and free reserves, then 181C is it is above the limit. Then you have to pass a special resolution. So you should take all the borrowings of the company, existing borrowings, add this new acceptance and deposits amount also. Suppose you're going to accept another 10 crores from the public as a deposit, add. Now the total amount, that should be less than paid up capital and free reserves. Then your approval can be ordinary resolution. But suppose this amount is more than the amount to be borrowed, together with the amounts already borrowed, is exceeding paid up capital and free reserves, then you have to pass a special resolution. Okay. Now, we move on to ceiling limits, meaning what is the maximum amount now up to which they can accept deposits. Okay. What is the maximum amount up to which they can accept deposits? The total of deposits existing and proposed not to exceed specified percentage of paid up capital, free reserves, and securities premium. So you should take paid up capital, free reserves, securities premium. Total. At any point in time, your deposit should not exceed this percentage. Friends, suppose your PC plus FR plus SP comes down, then you have to correct it. You have to repay the deposits. You can't keep it. The 35% should, it's not, you can only have up to this. So if you are buying back shares, be careful. This deposit should, once you buy back shares, your paid up capital will go down. Free reserves will go down. Then still the deposit should not be more than this percentage. For an ineligible company, meaning ineligible company could be a private company or a public company which is not eligible. So if they cannot accept from public, hello, not applicable. They are not allowed to take from public. Only members, up to 35% you take. If these bakras are willing to give you more money, the another 35% you take it from them. Enjoy. Allowed. Eligible company. We already saw eligible one. Eligible company can take from members 10%, from public 25%. So there is a cap on members also. 10% from members and 25% from public. So from members you can take only 10, whereas from public you can take 25. Now, eligible government company, there is no sub-ceiling. Eligible government company, there is no sub-ceiling. There is total 35. You take it entirely from members or you take it entirely from public. It is not 70. Please, hello, my folded arms, please see. This is not 75, 35 plus 35. No, it is 35 from members or 35 from public. Maximum 35. Okay. You decide how you are going to do it. Net worth definition I have given here. It will be frequently coming in your topic. It will be coming here. It came earlier, I'm sure. Later on, when you come to final, I will teach you. Net worth will come regularly. Net worth, you have to be very careful. First, aggregate value of paid up capital. Aggregate value of paid up capital. Total paid up share capital includes preference capital also. So, sometimes they might give you a problem where they might give you all these information. Then say, what is the maximum amount that they can take as deposit? Also, what is whether they have exceeded it like that. So, aggregate, so they give the balance sheet. Extract or the full balance sheet they'll give. From that you have to. So, they'll also give you how much the existing deposits, etc. Okay. So, aggregate value of paid up share capital, which includes preference also, all reserves created out of profits. Okay. Here they are not only linking it with dividend. They are saying if it is created out of profits, good. Whether capital or revenue. If you have sold a land, got money, in cash, you realized it in money, that is there, then that profit also can be considered. So such reserves can, though it's a capital reserve, it can be considered. Okay. Debit or credit balance in P&L account. That means if there is a credit balance, enjoy, add. If there is a debit balance, plus of minus, minus. Am I correct? Credit balance is plus. Debit balance is minus. Plus of minus, minus. You have to minus. Am I correct? Plus of minus, minus. When you open the bracket, minus. Securities premium. Sorry, it's spelled wrongly. Sorry. There's a spelling mistake. I don't know how it's survived. Premium. Securities premium. Sorry. Yeah. Premium account. Minus. From this, you have to reduce the total accumulated losses. Deferred expenditure, which is appearing in the balance sheet. See, deferred expenditure will be in the balance sheet, not on the asset side, because you can't keep it. There is no place to keep it in the asset side. You'll have to take it under reserves and surplus, negative item, it will be there. Also, miscellaneous expenditure not written off. In the sense, preliminary expenses, all that which Darshan was telling us now, which cannot be written off using securities premium account by a listed company, all that. That amount also you have to reduce. Also, while calculating reserves, you cannot include revaluation reserve. You cannot include write back of depreciation and any reserve created on amalgamation. Please, when you are amalgamating, there might be a capital reserve created. That cannot be considered. Revaluation reserve cannot be considered. Yeah, that revaluation reserve is a cosmetic item. Okay, merely because your value of your land is high, you are putting it in the books as capital revaluation reserve, increase the land price. So window dressing, nothing of no use. Tomorrow when you are selling the land for the purpose of calculating the profit, you will take only the WTV, the original cost of that land, right? You cannot take the revalued cost. No way. Okay. Turnover is also defined because since the word turnover is used here, turnover of not there, it's defined in the Act 291. The gross amount of revenue recognized in the profit and loss account from the sale, supply, or distribution of goods or on account of services rendered or both by a company during a financial year. Defined so that you don't have any doubt about it. Now we move on to the procedure for acceptance of, private companies satisfying the following criteria are exempt from ceiling limits. Meaning that ceiling limit is there, na? Ineligible company ka hai na? 35. That will not be applicable to a private company which satisfies the following criteria. A private company which is a startup. For 5 years from the date of its incorporation, it can run naked. Startup company means great, go, enjoy, do whatever you want. Okay, no ceiling limit for you, we take. Or B, a private company which fulfills all of the following conditions. Namely, which is not an associate or subsidiary company of any other company. Which is not an associate or subsidiary company of any other company. The borrowings of such company from banks, financial institutions, or any body corporate is less than twice of its paid up share capital. So you take the paid up share capital 2 times. If your bank borrowings is going beyond 2 times of the borrowing from banks, financial institutions, or body corporate, it should be less than twice of its paid. So you multiply PC by 2, whatever number your bank borrowing, financial institution borrowing, and body corporate lending received by you, intercorporate loans received by you, should be less than this 2 times paid up capital, or 50 crores, whichever is less. This condition is very difficult to, because twice the paid up share capital, let us say that your paid up share capital is 10 lakhs. It can't be more than 20 lakhs. Your entire borrowing should be less than 20 lakhs. Oh, possibly, yeah. So most of them will not satisfy this. Anyway, if you're able to satisfy, good. Debt-free companies can do this. Such a company has not defaulted in the repayment of borrowings at that subsisting at the time of accepting deposits. If you are able to satisfy A or B, then the ceiling limit on acceptance of deposits is removed. That you can accept any amount as deposit, right? Certain companies are straight away exempted from these rules. I told you now, this is applicable only to non-banking, non-finance companies. It is not applicable to banking company, which is governed by the Banking Regulation Act. It is not governed. It is not applicable to non-banking finance companies, NBFCs. It is not applicable to housing finance companies. Other companies are specified by the central government. They may exempt in future some companies. As of now, no. Okay. Main are these 3. NBFCs are governed by RBI. Housing finance company governed by RBI. Banking company governed by RBI or the Banking Regulation Act. So they are exempted from these rules. They are exempted from these rules. That is why I kept on telling this applies only to a company which is not engaged in finance business. It should be engaged in manufacturing or trading and accepting deposits for funding its short-term working capital requirements. Darshan, if you are asking questions like this, how I can answer? What is your understanding of debt to equity ratio? I don't know. Because for me, debt to equity ratio, I will include free reserve also. So equity under the head equity, I will include free reserve also. Or reserves I will take. Whereas here only paid up share capital is there. So this is not debt to equity ratio. So don't get confused with debt to equity ratio. Here free reserves is not there. It's just a calculation given to you, do it. Don't try to double guess the department and say, is it debt to equity ratio? It is not debt to equity ratio. The calculation is explained here clearly in front of your eyes. If you can follow it, follow it. Okay. Debt to equity ratio is a totally different concept, which is not to be worried here. Okay. I'm worried about Mr. Darshan because he thinks too much. And that is very dangerous for CA exam. Enough is enough, Mr. Darshan. If you have understood what I have said is enough. Beyond that is debt to equity ratio 2%. How can you get it? Is this debt to equity ratio? Debt to equity ratio, totally different concept. Okay, don't get confused with debt to equity ratio. Why I am telling you, exams also, if you write enough, it is enough. If you keep writing something beyond what is asked, examiner will become a little worried. Hey, what's happening here? So you might lose some marks that you are already eligible for. So try to avoid doing that. Limit yourself to what is the answer. Give it. Moving on. We are now going to the procedure for acceptance of deposits from public. The procedure for acceptance of deposits from members. First, we are going to see members. Then we are going to see public. Okay. 73, first we are going to see. Then specifically applicable to public, 76 we are going to see. Then common, both for members and public we are going to see. Okay. First, passing of a resolution. So every company should pass a resolution in general meeting. You know what resolution they have to pass, either ordinary or special as the case may be, right? So you have to pass a resolution. This is applicable to eligible companies which are accepting from members. companies which are accepting from members. They have to pass a resolution. Then, very, very important, before accepting deposits, there should be an issue of circular to all its members by registered post with acknowledgement due or speed post or by electronic mode in form DPT1. This circular is very, very important because it is to be contained in a form DPT1, which is a statutory form. You can't simply write to your members and say, hey, guys, we are lucky, you are lucky buggers. We are willing to take your money. We are making a lot of money. So you give me some more money, you will make more money. All sorts of nonsense you cannot write. You have to give your balance sheet and P&L account. 5 years. You have to prove that you are viable, that your profits are there. So the minute he sees all these numbers, whatever you have written in the letter, he will ignore. He will only see the reality of your balance sheet and P&L account. Audited. Also, you should give a certificate of the statutory auditor of the company, stating that the company has not committed default in the repayment of deposits in the payment of, or in the payment of interest on such deposits accepted either before or after the commencement of the act. This certificate shall be attached to form DPT1. So in case this company is a defaulter, then this auditor will not be able to give us certificate that the company has not committed default. So straight away out. Defaulting companies cannot accept deposits. See how depositors are protected. This circular, friends, remember, this circular is similar to prospectus. Wait, similar, not identical, similar. The purpose is you can't state anything you want here. You have to be careful in what. When we come to 76, there you will find it's almost like prospectus. Okay. Here, because it's members, it's not called advertisement. It is called circular. A copy of the circular containing the statement shall be filed with the registrar within 30 days before the date of issue of the circular. So even if a member has not got it or some problem, he can still go to the registrar's office and get it. Okay. In addition to, see, you issue the circular by sending it to all the members registered post acknowledgement due. In addition to that, the circular may be published. Here, there seems to be an option. If you want, see, in addition to that, sending it to the members is not negotiable. You have to send the circular to the members in DPT1 within you have to, only after you send it, okay, you can accept deposits, right? Before that, a copy of the circular containing this statement, auditor certificate, shall be filed with the registrar within 30 days before the date of issue of the circular. So, you have to file with the registrar, okay? After 30 days only, you can go for offer. Because the minute you file with the registrar, it becomes a public document. There may be comments about it in the press. Somebody may say, not a good deposit, don't invest. All that should come. Then only can. In addition to issue of circular, you should also release an advertisement in the 2 newspapers. One in English and one in the vernacular, having wide circulation in the state. Okay. So this is one more thing. Also, the company shall certify that it has not committed any default in repayment of deposits, either before or after the commencement of this act, or payment of interest on such deposit. In case the default had occurred, the company should have made good the default, and a period of 5 years should have elapsed. So, in case there is a default, then the company should have at least made good. That means repaid the deposit. And for 5 years, they cannot accept deposits. Only after expiry of 5 years, they can again give circular. Deposits may be secured. Okay, so though normally they will not be secured. If you are going to create security for deposits, you might as well issue debentures. You understand my point? So in case you are going to have secured deposits and all, it makes sense to go for debentures. Why go for? If you're anyway going to create a charge, If you're going to create a charge, better go for debentures. That's easier to handle. So for the purpose of providing security, every company inviting secure deposits shall provide for security by way of a charge on its assets. Okay, excluding intangible assets and for the due repayment of the amount of deposit and interest thereon, for an amount which shall not be less than the amount remaining unsecured by the deposit insurance. Believe me, creation of security is the most foolish thing you can ever do. If you're going to give some security, better go as debenture. That is easier. The company shall ensure that the total value of the security, either by way of deposit insurance or by way of charge or by both on the company's assets, shall not be less than the amount of deposits accepted and the interest payable. So what you can do two things. One, you can find out what is the total deposits maturing. You can take out insurance. In case the company does not pay, the insurer will pay. Allowed. In case that is not fully covering, balance you can give security. Okay. In case deposits which are secured by charge on the assets referred to in Schedule 3 of the Act, excluding intangible assets, the amount of such deposits and interest payable thereon shall not exceed the market value of assets as assessed by a registered value. Security not being in the nature of a pledge, meaning deposit of mobile goods, for deposits that specified in Subrule 1 shall be created in favor of the trustee from the depositors. So just you had debenture trustees for debentures, you can have depositor trustee also, deposit trustees. So you will appoint deposit trustees and the security will be created in favor of them. So you will register a mortgage in favor of them and you will inform the MCA and file the data in favor of them. See the charge, this is a charge which is registrable under the Companies Act. So the charge shall be created on specific movable property or specific immovable property of the company wherever situated or any interest therein. Okay. So deposits that are not secured shall be referred to as unsecured deposits in circulars and communications. I think this is very important. When you are sending circular or communication, clearly you should mention the deposits to be accepted by the company are unsecured. Okay, only then. In fact, many times I ask the question to participants of my workshops on finance and all that, whether bank deposits, for example, deposits of the State Bank of India, if you have a fixed deposit in State Bank of India or HDFC Bank, is it secured or unsecured? Fixed deposit with State Bank of HDFC Bank, is it secured or unsecured? I'm sure one or two of you will give an answer. Let us see who's going to give a correct answer. Deposits FD, fixed deposits made in State Bank of India or HDFC Bank, are they secured or unsecured? So every deposit accepted by a company shall be repaid with interest in accordance with terms and conditions of the agreement. My question on SBA, I will let it hang. You please answer. Anytime you answer, you'll take it up. But right now, I'll proceed with the topic. I'm not waiting for your answer. Correct answer given by Mr. Reddy. Deposit with SBA secured. No, madam, unsecured. Darshanji, no, it is unsecured. Only Vishwanath Reddy has got a point. Up to 5 lakhs, there is insurance. So up to 5 lakhs, you are, because of insurance, you will get it. Beyond, because the bank will pay insurance. To the up to 5 lakhs, they are compulsory required to pay insurance. In which case, the Deposit Credit Guarantee Corporation will give you the money. Even, believe me, if a bank is going, if the bank is folding, there is no money. Even the DCGC cannot help you because they may not have money to pay. They will go insolvent. So it is first, please, no. See, most of you are assuming that it is secure. No, it is unsecured. There is no security. There is an insurance on it up to 5 lakhs. That is not security. You cannot touch one asset of that bank or you cannot touch one asset of that company. It is unsecured. You have no security, sir. 5 lakhs is the insurance money. That if you want to go and claim it from the Deposit Credit Guarantee Corporation, you'll get it. Okay. See, this is something that you have to remember and keep telling people also. When somebody says, Mr. Srikanth, I'm depositing in State Bank of India, I'm having security. It's not security, it is unsecured. I'm not saying SBI cannot repay. SBI has got huge money to repay. That is different. But essentially, it is unsecured. Any deposit with the S Bank, unsecured. Bandhan Bank, unsecured. Okay. Don't think it is secured. If Bandhan Bank folds or S Bank folds, that's all. 3 vertical lines on your forehead, nothing will come. 5 lakhs deposit, go and claim, go. We'll see when you get it. So deposited, suppose your uncle has deposited 50 lakhs, the bank folds, then 5 lakhs, what is it? Balance 45 lakhs gone. Tilka tell you, it is out, it is go. Balance 5 lakhs, you will that too. By the time you get, you'll go mad. So I'm not saying don't put money in bank. I'm saying please remember that it is unsecured. Okay? With a low rate of interest. Such a low rate of interest. That too taxable. Seriously, loser's game. It's not inflation proofed at all. Only trust, etc. will keep. Where the need is absolute safety, you can prefer. Because I tell you, after having made this comment about State Bank of India, I will take back also because SBI is a huge monolith. It's got huge assets and it's extraordinarily well run bank. So your money is safe, but no security is there for you. Okay. Nothing happened with PNB. PNB is doing well. Please don't tell. Yeah, I think there was a doubt about PNB because the Nirav Modi and all that thing. Otherwise, Madam, PNB and see, you know something? SBI is the largest public sector bank. ICICI is the largest private sector bank. But yeah, SBI is the biggest bank. Okay. Followed by ICICI Bank. Then HDFC. Okay. So PNB is the second biggest public sector bank. Okay. Second biggest public sector bank. In terms of loan, in terms of deposits, everything. Okay. No, the reason I'm asking these questions and you're giving these responses is to understand generally about this subject. Okay. So believe me, most companies, or rather 99% company will only accept unsecured deposits. Very clearly, they will mention the deposits are not secure or unsecured. Okay. Once you have accepted deposits from the, repayment of deposit, you have to repay the deposit. Yeah. But it is a good idea, right? It is a very good idea because remember, so many sections in the Act you cannot do if you are not redeemed your deposits, repaid your deposits. For example, DVR, differential voting rights, you cannot do. There are many things you cannot do if your deposits are not repaid together with interest. So better go for repayment of deposits. In case a company fails to repay the deposit or part thereof or any interest thereon, the depositor concerned may apply to the tribunal for an order directing the company to pay the sum due or for any loss or damage incurred by him as a result of such non-payment and for such other orders as the tribunal may deem fit. So, what is the remedy for non-repayment? You can go to the tribunal and apply to the tribunal for an order directing the company to pay the sum. But believe me, by the time this has happened, the company would be insolvent. So the tribunal will only send it to insolvency. Whereas at that time, whatever you get is whatever you get. Okay. So of course, the remedy is there. If the company does not pay, you can go to the tribunal. Once you have accepted deposits, you have to maintain a register of deposits. And therein you have to enter all these particulars for each depositor. Name, address, PAN, guardian in case of minor, nominee, deposit receipt number, date and amount of each deposit, duration of the deposit, and the date on which each deposit is repayable. There are details here. It will be, usually this will be in electronic form. Maybe they might even have a separate software for depositor handling. It may be a separate module in the financial accounting system. All these particulars will be automatically maintained and generated. In case the auditors want to see, they'll print it out and give it to you, or unless you want a printout, they'll give. Otherwise, if you are willing to go and audit directly, I'll go. Normally, I will not ask for a printout. I will go directly and I'll audit it through the ERP. Now, we have seen acceptance of deposits from members. Now we are seeing procedure for acceptance of deposits from public by eligible companies. Already we have seen eligible company. Only eligible companies are permitted to accept deposits from the public. In addition to their members. Members 10%, public 25%. Right? We already seen this, so I'm not going to waste your time on this. Yeah, what I will do, I will at this stage, instead of going into the topic immediately, I'm announcing a small break for about 5 max to 10 minutes. Means now the time is 7:50. Maximum we can reassemble at 8 or before, if possible before. Okay. So just quickly go for a biology break. Maybe grab a cup of chai and come and sit in front of the computer so that we can continue our exciting journey of discovery about deposits, acceptance of deposits by companies. Welcome back from a well-deserved break, and hopefully you had a good cup of tea or having a good cup of tea, whatever. There's a question raised by Mr. Priyakant Dharwada, and it's like this. Director of company borrowed money from his brother, and that money will be received by company. Then it will consider as deposit or not? It will not be. It will be considered as deposit. It will be considered as deposit. Kyun? Because he has borrowed and given. Na? So your director, if you receive any money from a person who at the time of giving the money was a director, it is exempted. But that director or relative should not have borrowed it. Whereas he has borrowed it from his brother. Now, you are using the word company. Is it private company or public company? Because if it is public company, straight away gone. It will be treated as a deposit. But if it is private company, then why not brother gives it? Private company, relative of director can give now. So if it is a private company, then let the brother give directly. Why lend? But if it is a public company, then out. Only director, and that too, he should not have borrowed it. So I hope I have answered your question. Moving on with our topic. Now we are moving on to procedure for acceptance of deposits from public by eligible companies. Now eligible companies. So earlier when we were talking about private company or ineligible public company accepting from members, we called it circular. Now we are calling it advertisement. Okay, thank you, Mr. Priyakant Garwada, for confirming. So here we are calling it advertisement because it will be issued in newspaper, whereas that will be sent by cover, by registered post to the member directly. It is like a private placement, whereas this is public. Everybody can see. Aam Aadmi, innocent people, ignorant fellows like me can read it. We will see the advertisement, we will see the easy chair, and we will see the comfort, and we'll say, okay, all my hard-earned money, I will deposit in Dubakur Limited. Okay. So I have to be protected. That is what is happening here. Okay. Which is why that easy chair advertisement cannot be given. Before you give that advertisement, first you have to give a proper statutory advertisement in form DPT-1. So DPT-1 is the statutory format. My dear friends, it has a lot of details that are not difficult, but very difficult to give. See, I had recently one example where one gentleman came to me, one of our very old 40 years client, the director's son-in-law. He showed me this thing and said, I'm asked my father-in-law to give me 25 lakhs. Just check if it is okay. I want him to invest in my startup company as an investor. So I went through the balance sheet. What balance sheet? He gave me a project report, which is some nonsense he had written there. I said, sir, that's okay. When did you form this company? I formed this company only 6 months ago. So then where is the balance sheet? No, sir, it's a startup company. Baba, startup is okay, but at least show me projections. Then I told him, okay, you are saying it's a 6-month-old company, startup company. Show me projections, ma. Show me your business model. Show me your revenue model. Show me something that I can believe. Okay, like that. Of course, I can't tell believe because father-in-law is done. So then I gave him one suggestion. Luckily for me, the deposit rules were there now. So I told him, hey, you are a startup company. So if your father-in-law gives any money, and he is not wanting the father-in-law to become director also. He wants to take the money, but no control on it. So his father-in-law should not become director. So I said, look here, you are a startup company. You are taking, it so happens 25 lakhs he was taking, correctly 25 lakhs he wants to take from his father-in-law. No problem. So you are a startup company. I said, only one small formality, my dear friend, get yourself registered under the department, with the department, and come. Then we'll create a convertible note, which will be like a debt, repayable within 5 years or 10 years. If at all your father-in-law wants, let him have the option to convert the note whenever he wants. Oh, is it so, sir? Why, sir? Why can't we have straightaway shares, sir? I said, my suggestion. Then I sent a mail to the father-in-law saying, sir, no problem. Please give it to your son-in-law. It's not a problem. But my suggestion is do it in this way. He was so happy. He said, yes, as auditor has told statutorily, so we do it like this. So just giving you this. Why I'm telling now, sometimes as auditors, we have to go beyond the call of duty. See, why should I do? But what to do? See, these people, hard-earned money. Somebody earns so hard. These fellows come and uselessly take the money, and not even his father's money. Huh? At least if it is own father's money, grandfather's money, it's okay. Somebody, poor fellow, had a daughter and gave her to you. For that punishment, he has to give you all this. My God. I'm sorry, I'm feeling, because I'm also father of a daughter and I have a wonderful son-in-law. I have a wonderful son-in-law who is a totally different category. He will not allow me to spend. He will only spend. such a son-in-law. It's all luck, but I'm saying people are like that. They create all sorts of things, and they do. So you have to use the law to protect also sometimes. Now, so the advertisement is to be issued. Every eligible company intending to invite deposits shall issue a circular in the form of an advertisement in Form DPT-1 in 2 newspapers, one in English and one in vernacular, having wide circulation in the state in which the registered office of the company is situated. So this is, and that should be in Form DPT-1. It's a public advertisement. Idea is, once this advertisement is issued, then after you issue this advertisement, you give any number of EC chair advertisement. So because if that public wants, they have access to DPT-1. Also, the circular should be uploaded in the website of the company. The circular shall be issued under the authority and in the name of the board of directors. Also, remember, giving advertisement one thing, you should register a copy of the advertisement duly signed by a majority of the directors, shall be delivered for registration to the registrar not less than 30 days before publication. Does it sound similar to something else? Do you remember? Same thing we had, registration of prospectus. Am I correct? But there the validity period is slightly different, but 90 days if you remember. But you have to register not less than 30 days before publication of the statutory advertisement newspaper. So first you have to go and file it with the registrar. Registrar will go through it, register it, give it to you. Then 30 days. Only then you can release statutory advertisement. Once the advertisement is registered, that advertisement shall be valid. That advertisement shall be valid. It's registered and then issued within 30 days. Okay, I mean after 30 days, that advertisement shall be valid until the expiry of 6 months from the financial year closure or date of AGM or date on which AGM ought to have been held. Friends, to understand this paragraph, it would be nice if you could have studied management and administration. But no problem, I will explain to you. When you come to management and administration, the faculty will teach you again. I'm just, for the sake of clarity here, I'm telling you. Normally, annual general meeting should be held in every year. The interval between 2 annual general meetings, the gap, the time gap, shall not be more than 15 months. Lastly, AGM should be held within 6 months from the date of closure of the financial year. So, what they are saying, you release an advertisement now. For example, you release the advertisement sometime in June, let us say, June. So that advertisement will be valid till next year, 6 months from the financial year closure. From the financial year closure or the date of AGM or date on which AGM ought to have been held. So let us say that you release it in June, then it will be valid till the date of the financial year closure, 6 months, or the next AGM, or the date on which the AGM ought to have been held. Usually, companies will release it sometime in October, September or October. I'm sorry, sometime in July or August. Sometime in July or August. It will be valid till the expiry of 6 months on the finance. So if I'm releasing it now, July or August month, then next year, 31st March, 6 months from 31st March. So in April, May, June, July, August, September. So before September 30th, it will expire. Or in case you're holding your AGM in July or August, on the date of AGM, it will expire. Or in case you are not holding your AGM, then you have to calculate the date, whichever is earlier. For example, if 15 months is expiring before 6 months from closure of financial year, then within that date, the date on which AGM ought to have been held. Okay. So these three rules I'm telling you now, you will study them when you come to management and administration. Okay. A fresh advertisement shall be issued in each financial year. Right. So before the expiry of that earlier advertisement, you have to issue a fresh advertisement. So this is a routine work that you have to keep doing. Usually what they will do, they will wait for the audit to get over around July or August. Before the AGM is called, they will issue the advertisement. Or other, the AGM will be held and then they will issue the advertisement. And then it will be valid till the next AGM. Or expiry of 6 months from the date of closure of financial year, or on the date on which the AGM ought to have been held. Okay. So, Section 76 deals with eligible companies, but there are many provisions of Rule 19, which is pursuant to Section 76. Provisions of Section 73 and 74 shall mutatis mutandis, with such changes as may be applicable. With such changes as may be applicable, will apply to acceptance of deposits from public by eligible companies. Right? Now, if you want to accept deposits from the public, an eligible company shall be required to obtain the rating from a recognized credit rating agency. Rating means like CRISIL or ICRA or CARE. These are credit rating agencies. I don't know. I think CRISIL is out or ICRA is. One of them got blacklisted. I don't know who, forget who. But so they are guys who will come and do a due diligence. They will study your business operation. They will do everything. And then they will say what type of risk you are. Friends, each one of you has a rating. Okay, it's called CIBIL rating. You will have a CIBIL rating only if you will have a CIBIL rating. 1 second. You'll have a CIBIL rating in case you borrowed money. The minute you borrow money, the bank will create a CIBIL record for you. And if you pay correctly, they'll keep on giving you better and better scores. If you default on your EMI, your CIBIL rating will come down. So you have to maintain your CIBIL rating. In fact, you will start with a minus rating. And then you will start getting. I'm just telling this to you. So the minute you start your career as a chartered accountant, first employment, immediately go for a loan. Whatever loan. Go for a small car loan or go for a housing loan. Get yourself, even if you're not going to stay in that house, you're going to stay in a rented house, get yourself a house, borrow money, prepay correctly on the due date, pay the EMIs correctly. Start creating a credit record so that later on, when you want to go for that palatial apartment in Mulund or wherever you want to go, your CIBIL would be very strong and the bank will be able to give you at a lower rate of interest. See, credit rating agency will give you a rating now. For example, ratings are, for example, CRISIL ratings are like AAA, AAA plus, AA, A plus, A minus, B plus, B minus, triple B, like that. So if you go and give him and he sees the Tobacco Limited balance sheet, he will give a rating. If he gives you a C minus rating, that is as good as no need. Because no bank is going to lend money to you. Minimum lending is B plus. Okay, if you don't plus, there's no point in going. For example, IFCI, the grade had B minus or information. They could not take public debentures. They had to go unlisted only. Listed, they cannot go because the rating was B minus. I'm not talking now. About 15 years ago, they were B minus rating. They went for a private placement of debentures rather than public. They couldn't go public because minimum B plus. So like that, the rules were, SEBI rules were like that at the time. So this credit rating is very, very important, both for company and also for individuals like you and me. CIBIL rating is very, very important. And that's why you should never allow it to go down. Always pay on the credit cards. Pay on the due date. Don't delay. EMI, pay on the due date. Don't delay. Any commitment. Pay. Actually, if you are a chartered accountant, okay, your affairs should be above reproach. Your finances should be above reproach because you are going to give advice to other people on financial propriety and financial thing. You should be. Credit cards also, yeah. See, first time credit card they'll give you without CIBIL. First time they'll give you. Generally, credit cards they'll give you. See, credit cards they'll give you without CIBIL rating. No problem. But that is how you'll fall in the trap. Because if you default in credit card, your CIBIL rating will come down. So, option, don't take credit cards, or just now my driver came to me and gave me my credit cards. I have 3 credit cards. My total limits are about 25 lakhs. I spend, I pay. On the due date, I pay. Okay. That way my credit rating, my CIBIL rating would be pretty high, 800 plus it will be. Because I will never default. Why default? Okay. Ultimately, you'll end up paying more interest. At least pay. Okay. This is, while you are there, let me, since, sometimes I like to give you this type of nonsense advice. My grandfather, taught me a very valuable lesson. When I was very young, I used to go with him to marriages. And, in South India, marriages, when we go, they will serve the food on banana leaf. So huge variety of items will be there. And people, they keep on serving. And because they are, hospitality, they'll keep on serving without. My grandfather will not take, his rule is very simple. When I get up from the table, the leaf should be clean. He came from a poor background. So he has not had one meal also. In the night, he has gone to bed without eating. So he knows the value of what is food. So he said, I will not waste food. So what he used to do, he used to eat everything. He used to ensure that it is completed. He will also insist that I should follow. Now, I was a greedy fellow. So I'll put everything on the plate. Now, I'll have to end up eating everything and I'll have stomachache. Then 3 times it happened. 4th time, my grandfather asked, what is the mistake you are doing? I don't know. He said, don't put anything on that leaf unless you are going to eat it. Don't have anything put on that leaf unless you are going to eat it. So next time when we went for a marriage, I ensured that I took only what I wanted. My plate was full of food that limited, which I'm going to eat. So I ate it. Plate was clean. And I was, the lesson my grandfather taught was, I'm so sorry if I've said it before. I'm so sorry. If I'm repeating it, I'm very sorry. But in this context, believe me, if you want to be financially sound, do not spend money which you have not earned. Okay, I'm so sorry if you have said this story before. I'm so sorry. I wasted your time. I'm very sorry. But the point is, if you want to be financially sound, do not spend money that you have not earned. Then your debt will be controlled. Do not borrow money that you cannot repay. Then your debt will be controlled. Your CIBIL rating will be high. Okay. Yeah. Once again, my humble apologies to Darshan for repeating the story. I'm very sorry. Okay. If you think it's valuable, please take it as a life lesson. Okay. Good. Now, so coming to the point, eligible company should be required to obtain the rating from a recognized credit card rating agency. The given rating which indicates safety shall be informed to the public at the time of invitation of deposits from the public. Okay. So the public should be aware. Suppose if they got B minus, that should also be informed. If it's B minus, they can't go. The rating shall be obtained for every year during the tenure of the deposits, every year. And believe me, it's a very, very costly activity, getting rating and all. So if you're desired to go your rating and all, you should be able to raise funds. Okay. No, so nice of you to confirm that it can be heard many times. Okay, since you told like this, I'm going to tell one more story. I will tell you. Okay, my wife always complains about me telling these stories again and again. Though, some of my relatives like to listen to them many times. In family occasions, they will make me tell that story again. Some stories are there, which family stories are there, which, the way I tell it, they will ask me to tell it again and again. There was this very rich billionaire. Billionaire is a rich billionaire. He had a yacht and he used to entertain his friends and all. 75-year-old guy. He was married to a 32-year-old girl or 27-year-old girl, let us say. A billionaire, yeah. 7th wife. She is his 7th wife. Now that gentleman will be playing cards in the yacht along with his friends, and he'll tell one story. The minute he tells the story, this story he would have told so many times. That young wife, she'll get angry. Finally, her frustration will go. Because this fellow is a rich man, how much she can put up with? So finally, she will blurt out, you know what, darling, you've told that story many times. This is possibly the 100th time you are telling the story like that. Immediately, this man will look at her and said, Madam, I've reached a stage in my life when I can change my wives, but not my stories. Okay, hope you understood the joke. I've reached a stage in my life when I can change my wives, but not my stories. You are my 7th wife, I'll get 8th wife, but I can change the wife, but I can't change the story. Like that, sometimes old faculties like me, Buddhawalas like me, we have stories that we keep on telling. Anyway, Aisha, no problem, no need to worry about it. Sometimes, but see, this lesson my grandfather taught me has made an indelible mark and has made me rich and debt-free. There was a point when I became debt-free, zero debt. I had 5 properties, 0 debt. That is why I'm giving this suggestion to you. Now, again, I've taken on debt for 1 more property. You can, nothing wrong. But you have to have that concept of how much you can borrow and how much you need. Okay. Darshan, now you come to tenure. Sir, I'm answering your question now. Period or tenure for which deposits can be accepted. Deposits repayable on demand shall not be accepted. Demand means what? If you go to a State Bank of India and open an SB account, savings bank account, you deposit 50,000 now. Next minute, you can issue the check and they have to honor the check. These are called deposits repayable on demand. Deposits repayable on demand. Current account, you deposit 1 crore. Next minute, you issue a check, immediately he has to honor the check. On demand. Whenever you want, you will take. These are called on-demand deposits. Only banks can accept it. Deposits repayable on demand can be accepted only by banks from the public. From Nidhi companies can accept deposits, but only from their members. On-demand deposits. Okay. Otherwise, ordinary companies cannot accept deposits repayable on demand. Okay. So, duration of the deposits may be accepted shall not be less than 6 months, shall not exceed 36 months. So, it should not be less than 6 months, maximum 36 months. Because if it goes less than 6 months, it will get into money market category, short call money market category. So still, so they say you cannot. Whereas sometimes for short-term requirements, for example, sugar industry, now the crushing would have started and it will keep on going till January, February. Okay, so this is the period. After that, again, they will go, depends on the area. Maybe I'm wrong, but mostly the cutting, the cane cutting and crushing will start now. And it will keep on happening. Sugar industry is seasonal. So what happens is at this time, my need for money will be more. So at that time, I can take some deposits for the purpose of meeting short-term requirements of less than 6 months. Provided such deposit shall not exceed 10% of the aggregate of the paid-up share capital, free reserves and securities premium. Earlier we saw limit. This is within that limit. These very short-term deposits of less than 6 months cannot be more than 10%. And the deposits are repayable not earlier than 3 months. So that is the bare minimum. Earlier than 3 months and all, for 15 days, 20 days and all, you cannot take deposits. Okay. So this is the tenure as inquired by my friend, Mr. Darshan. I have given you the answer for your original question. Now only I gave the answer. 37th slide, you got the answer. Okay. Now we are moving to common provisions. Okay. This is common provision. Common means both deposits accepted from members as well as deposits accepted from public. Common provision. So tenure is a common provision. Whether members or public, tenure is common. Creation of charge on assets where deposits are secured. Only if the deposits are secured, you have to create. You cannot create charge on intangible assets like goodwill, trademarks. No. Total value of security should not be less than the amount of deposits accepted and interest. The market value of assets subject to charge shall be assessed by a registered valuer. You don't decide. Registered valuer tells. The security shall be created in favor of a trustee for the depositors on specific movable and immovable property. We already saw it when we saw secured debentures, but again, it's covered here. as a common provision. A register of deposit should be maintained. Already the content of the register we saw. So this is common. Every company accepting deposits shall maintain one or more separate registers for deposits accepted or renewed at its registered office. The entry shall be made within 7 days from the date of issuance of the receipt, duly authenticated by a director or secretary of the company. Said register shall be preserved in good order for a period of not less than 8 years from the financial year in which the latest entry is made. See, today, these registers are not in paper or book form. They are in the form of digital matter. So, infinite you can keep because there's no space constraint. But still, if you want to destroy, you can destroy the electronic record on the expiry of 8 years from the last entry made. Okay. Appointment of trustee for depositors. Right. So, which means the company should stop accepting deposits. Then only the latest entry will be made. From that date, within 8 years, you can destroy. We already saw about appointment of trustees for depositors. So, one or more trustees can be appointed. Written consent will be obtained. A statement shall appear in the. This is only for secured deposits. Unsecured, there is no need for a trustee. Okay. If you want, you can appoint. I don't think. Sorry, this is not relevant for unsecured or secured. You can have, but if you are going to create a charge, then that charge should be created in favor of the trustee. Okay. So. The role of a trustee is similar to that of a debenture trustee. The trustee for depositors will ensure that the interest is correctly paid. In case any action is to be taken, the trustees will initiate. In case the depositors meeting is to be called, they will call and all that. Just like you have a debenture trust deed, the company shall execute a deposit trust deed in form DPT2 at least 7 days before issuing the circular or in the circular in the form of advertisement. These are common provisions. Okay. Ceiling on rate of interest and brokerage payable on deposits. There is a ceiling on rate of interest and brokerage payable on deposits. You remember? See, if you're going to accept deposits from the public, there are so many companies accepting deposits. So how you are different? So you have to pay. For example, integrated financial services is there. They are brokers. What they will do, they have a lot of retired people, all those people come. So they'll keep on putting up advertisements in their office. So when a retired gentleman comes, immediately he will decide which one to invest. Whatever collected through integrated, they will get a commission. So there is no control on the rate of interest or brokerage payable. But in no case it shall exceed the maximum rate of interest or brokerage prescribed by the RBI. RBI will prescribe rates of interest and brokerage for banks and NBFCs. Now, same will apply here also. Interest, see, there is no limit on interest, but it cannot exceed the RBI rate, right? Whenever a company is accepting or renewing deposits, it has to take an application from the intending depositor. The application shall contain a declaration made by the intending depositor to the effect that the deposit is not being made out of any money borrowed by him from any other person. This is common for all depositors, not only directors. Even director has to give. But if director gives, it will not be deposit at all. But even normal depositors should tell. This is to prevent canvassing. So one man will go and canvass for a company. Then in his name, he will put the deposit. No. If you are putting borrowed money, then no. They let the person who lent come and put. In case of depositors who want to so desire, deposits may be accepted in joint names not exceeding 3. For example, husband and wife, father and daughter, because safety of the thing, so that the brother should not steal the money. So the father will have joint name with the daughter, like that. Nomination. Every depositor may nominate any person at any time. Nomination is allowed. Nominee shall be the person to whom deposit shall vest in the event of death. Okay. Another very important post-acceptance formality. within a period of 21 days from the date of receipt of money or realization of check or date of renewal of the company is required to furnish a deposit receipt to the depositor or his agent, right? Friends, this topic is almost completed. Sir, about 10 more slides are there, 10 or 15 more slides. But today it's almost 8:30 now. So let me stop here before, this is a very important topic, deposit repayment reserve and all, DRR. I don't want to cover it at the fag end of the session. Inshallah, we will meet on 27th when I will continue with this topic, finish it, and then I will start declaration of dividend. Okay, declaration payment of dividend, I will start. So, aaj to we will say kadam ho gaya. The class is over. Wishing you a happy evening ahead and a great career. So, let's hope to meet again on the 27th evening, 6 p.m. sharp. Bye.